What's going on, apes and apettes? Welcome back to the channel. Are we going to pump this week? We have the largest option expiration date that we have, quite frankly, ever seen with AMC stock. So we're going to take a deep look into that. Do we have a chance of seeing a gamma squeeze, as well as what is going to happen next week? Because that's going to play into how investors feel about AMC. Going to go over the max pain and the Ortex data as well. So if you guys find value out of this video, hit the like button for me, consider subscribing to the channel, and let me know your thoughts down below in the comment section. What is your price target for AMC this week? So jumping straight into it, AMC is currently trading at about $20.57 per share. That was the close of regular trading today. We went down 17 cents in after hours, but a pretty muted move on Friday nonetheless. The hedge funds want to keep us above $20 per share. At least that's what it is looking like. They kind of pin us wherever they want to keep us. They want to keep us above 20 but under $23 per share. So that's going to be quite interesting to see if the volume comes in and we break out of this pinned formation that we have been seeing, because ultimately hedge funds can manipulate us when there's low volume, but when there's not low volume, you can't manipulate us. So let's just first start off with looking at the option chain and what are the key levels that we do have to cross above. Well, obviously we have to stay above $20 per share because we have 26,000 for open interest on that strike, but we do have at the $22 strike 12,703 for open interest, 5,000 after that, 7,000 after that. At the $25 strike, 13,000, 5,000, 7,000, 5,000, 4,000. And then at the $30 strike, we have 22,000 for open interest. So all of these expirations, strikes, have roughly 5,000 for open interest. And then you do get the big ones at 25, 30, 35. And then 40 is going to be that monstrous one with 63,372 for open interest. So can we go to these prices? Certainly. It's not impossible to go over $40 per share by the end of this week. Keep in mind, it is a short week, so there's only 4 days of trading, and these contracts might look attractive because they are 8 cents or $8, whatever your terminology is you want to use, and they're cheap. But if you're gambling on these weekly options, then expect to lose all of your money. I do think market makers, hedge funds, they do obviously trade these options as well. They take the back end of this. So there's a lot of arbitrage opportunities. So a lot of this could be from them as well. As far as will we go to those prices, I think it's important to note, like I said, the short week, there's 4 days. The market makers can keep the stock pinned wherever they want when there's low volume. Imagine it like this. There's 30 million shares that trade hands every day. The market makers short 3 million stock every day. That's 10% of the volume. That's going to keep the stock wherever they want due to obviously shorting stock in the beginning of the day and then shorting stock throughout the day to make sure the price of the stock stays under, say, $23 per share like we have been seeing them do, or they start to buy stock at $20 per share and keep it above $20 per share. But when there is 200 million shares that trade hands, they can't do that in the same way. They would have to short, 30, 40 million shares to keep the stock pinned. So that's the thing. Do you think volume is going to come back into the stock? And me personally, I think we have to break out above the 20-day simple moving average to see things really go crazy. I'm not writing this off. I'm not saying it's impossible to make that move to $40 per share, but I wouldn't be gambling on the fact that it's going to happen. The first level that we really have to break out above is obviously $23 per share. $25 per share is going to be more of a psychological level. And then the real level is that 20-day simple moving average at $25.83 per share. Bollinger Bands are starting to widen as well, telling you, at least giving you a glimpse, that volatility is coming. Nevertheless, as far as the MACD, we are slightly bearish, but not all too much. You guys can see the gap between the blue and yellow line is not very wide. This was very bearish. This was very bearish. This was bullish, and this is slightly bearish. So good sign that we're not incredibly bullish on the MACD, and this could flip if we do have a good day, and that should be a good thing. I know back here we went bullish and the stock just kind of slowly sold off, but typically when it does, go bullish for the first time, that's a good time to initiate a position. So that's that. As far as the technicals are concerned, we do have this double triple bottom that has formed as far as right now. So that should be bullish, and that should give us room for the reversal unless we do see a gap down. So with a double bottom, you either see, obviously after the double bottom, you see that bearish trajectory turn into a bullish trajectory, and you start to see the price of the stock going up. To have that basically a false breakout, a false indicator, you'll have to see the stock gap down, and we're not gapping down. And to be quite honest with you guys, I think we are way overdue to see a bounce. So with that being said, my personal price target is around $24 per share, in between $23 and $24 per share. Obviously, it could go a lot higher than that if all of the earnings are good. I do expect them to be good because this is earnings for Q4 2021. People did have a lot of money. There was a lot of spending, and you probably are going to see good earnings. The next earnings report is when liquidity is actually going to be restricted in a pretty severe way because of the Fed tightening, interest rates going up. There's no more stimulus, no more child tax credit. There's basically no forms of stimulus left. So with that being said, I do think there will be a boost to AMC this week, whether 23, 24, or even higher than that. I'm not here to be your fucking cheerleader. I don't care what happens in the near term. I know most of you guys don't, and if you do, then you are listening to the wrong people, you are hearing the wrong information, and you are believing the wrong information. So the question is, now, is the money going to start flowing into AMC? Well, we've seen a lot of more bullish headlines for AMC over this weekend. We have also seen a lot of firms that are doubling down on their positions or even tripling down on their positions overall. We've seen over the past 2 months, institutional investors have bought about 32 million shares of AMC, bringing their total ownership to 172,105,000 shares. As we could see, all of these are pretty much bullish. One fund that has sold out, 2 funds that have sold out completely. DNB Asset Management, this is what made headlines because they are the biggest hedge fund in Norway, and they upped their position by 254%, buying about 1,000 shares of AMC, as well as a lot of other funds and hedge funds that are adding to their positions as well. So pretty interesting right there. As far as the max pain is at $23 per share. So the max pain obviously did not work for last week. The max pain was at $23 per share for last week. So take it with a grain of salt. It may or may not happen. Let me know what you guys think about the max pain down below in the comment section. As far as what is going to be happening in the markets this week, it's going to be earnings, and we only have 4 days of trading, but we're going to get a lot of companies that are reporting, like Goldman Sachs, Bank of America, Netflix, Procter & Gamble, and a lot of other transport stocks as well. So all eyes are going to be on those earnings to see how companies are doing and see how they guide into the future. Let's just say, for an example, if these recovery stocks, if your carnivals, your airlines start to, say that 2022 is looking good because, obviously there's pent-up demand still, then that could be a very good thing for AMC because they are a part of the recovery sector. So I want to watch how the recovery sector does starting off once they do start reporting earnings, and see if that translates into more volume for AMC and a more bullish sentiment overall. As well as that, not this week, but next week we do have the Fed meeting. So coming like Thursday and Friday, you're going to see investors start to position for that. So pay attention to the fast drops or fast pops that we see towards the end of the day and the beginning of the day. That's going to be key, and that will kind of give you a gauge of the market sentiment heading into the Fed meeting. I think it's already priced in, me personally. So after the Fed meeting, we should see some bullish reactions for AMC and for the broad markets. We did just see China cut its MLF rate from 2.95% to 2.85%. I covered that here on the channel last night as soon as that news broke. 15 hours ago. So watch that video if you guys want the total scoop on that, but they have not raised that rate or cut that rate in over 20 months. That is a sign their economy is slowing down and liquidity is being restricted. That's exactly what we want to see if you are an AMC investor. So that is going to be all for this video. Hit that like button, comment down below, consider subscribing to the channel on your way out as well. Love and appreciate you guys. Thank you for watching. Khaleesi says bye. See you guys later.